Stop whatever you're doing right now. Close your other tabs. Put your phone on silent, because what I'm about to tell you over the next 10 minutes could save you from the biggest financial disaster of your lifetime. Silver could be heading toward one of the most explosive moves in modern financial history. And I know that sounds crazy, because when people hear predictions like $300 silver or even $500 silver, the first reaction is usually disbelief. But here's the strange part. If you actually look at the data, the historical patterns, the macro trends, and the structural changes happening right now in global markets, the idea of silver moving toward $300 to $500 suddenly doesn't look that outrageous. In fact, some analysts believe the setup today may be even stronger than the conditions that led to the 1980 silver spike and the 2011 silver bull market. And yet, almost nobody in mainstream financial media is talking about it. Instead, most headlines are focused on short-term volatility. Silver drops 10% in a day. Silver rallies 15% the next week. Markets panic. Traders get shaken out. But here's the key question serious investors are asking right now. Is this volatility the beginning of a collapse? Or is it simply the calm before the most explosive silver rally in decades? Today, we're going to break down the real story. Because when you connect the dots between gold, inflation, global debt, commodities, and the silver market, a very powerful narrative starts to emerge. And by the end of this video, you'll understand why some analysts believe silver could experience a massive repricing event this year. Why silver's volatility is misleading. Let's start with what everyone is focused on right now, silver volatility. Over the past several weeks, the silver market has experienced some extremely dramatic moves. Prices surge, then suddenly drop, then surge again. For many investors, this kind of volatility feels like a warning sign, but historically, silver has always been the most volatile precious metal. And there's a reason for that. Silver sits at a very unusual intersection in the global economy. It's both. A monetary metal like gold and a critical industrial metal. This means silver responds to two completely different forces at the same time. When economic uncertainty rises, investors buy silver as a store of value. When industrial demand rises, especially from solar energy, electronics, and electric vehicles, manufacturers buy silver as a raw material. This double demand can create powerful price swings, but it also creates something else. Explosive upside potential, silver's 50-year price ceiling. To understand why silver could move dramatically higher, we need to zoom out, way out. For nearly half a century, silver has traded inside a relatively narrow range, from roughly $5 to around $50 per ounce. Think about that for a moment. Over the same period, stocks exploded higher, real estate prices skyrocketed, gold multiplied several times, but silver? It stayed trapped inside that same range, decade after decade. Many analysts believe this created a massive structural mispricing in the silver market. Because while silver's price stayed mostly flat, the world changed dramatically. Industrial demand exploded, money supply increased, global debt skyrocketed. Yet silver remained stuck in the same trading box. And when markets stay trapped like that for long periods of time, something eventually happens. They break out. And when that breakout finally arrives, the move is often violent. The commodity repricing pattern. There are several historical examples of this phenomenon. Take copper. For decades, copper traded inside a narrow range between roughly 50 cents and $1.50 per pound. Investors assumed that range would continue forever. Then something changed. In the mid-2000s, copper suddenly broke out. Within a few years, it surged toward $4 per pound, a massive repricing. Lead experienced a similar pattern. For decades, it traded inside a tight range. Then suddenly it quadrupled in price within a short period. This pattern happens more often than people realize. When commodities remain suppressed for long periods, they eventually experience sharp repricing events as markets adjust to new realities. Many analysts believe silver could be approaching that moment. The silver to gold ratio. One of the most important indicators in precious metals markets is the silver to gold ratio. This ratio measures how many ounces of silver are required to buy 1 ounce of gold. Historically, the ratio has moved dramatically during major bull markets. For example, during the 1980 precious metals rally, silver reached around 6% of gold's price. During the 2011 bull market, silver reached roughly 3% of gold's price. But recently, silver fell to nearly 1% of gold's value. That is historically extremely low. In other words, silver became dramatically undervalued relative to gold, and now that ratio is starting to move again. If silver simply returns to the levels seen during previous bull markets, the implications could be enormous. Let's run a quick scenario. If gold reaches $8,000 per ounce, something many analysts believe could happen in a prolonged inflation cycle, and silver reaches 3% of gold ES price, that puts silver around $240 per ounce. But if silver reaches the level seen in the late 1970s, closer to 6% of gold S value, then silver could approach $500 per ounce. Suddenly the numbers don't look so crazy. The inflation factor. Another major driver of the silver bull case is inflation. Over the past 2 decades, global money supply has expanded dramatically. Governments have printed trillions of dollars. Central banks have injected massive liquidity into financial markets. And every time money supply increases dramatically, something eventually happens. Asset prices adjust. Precious metals historically respond strongly to monetary expansion. Because gold and silver cannot be printed, their supply grows slowly, while paper money can be created almost instantly. This is one reason why central banks around the world have been buying gold aggressively in recent years, and many analysts believe silver could be the next metal to benefit from this shift. The industrial demand explosion. But there's another powerful force driving silver demand. Technology. Silver plays a critical role in many modern industries. Solar panels, electronics, medical equipment, electric vehicles, and renewable energy infrastructure. In fact, the solar industry alone now consumes hundreds of millions of ounces of silver every year. As countries accelerate the transition toward renewable energy, demand for silver continues rising. At the same time, silver mining production has struggled to keep up. This creates a classic supply-demand imbalance, and when demand grows faster than supply, prices eventually respond. The bond market problem. Now let's talk about something most investors are not paying enough attention to: the government bond market. For decades, bonds have been considered one of the safest assets in the world, but global debt has grown to staggering levels. Governments are borrowing more than ever before, and rising interest rates are putting pressure on those debt levels. If investors begin losing confidence in government bonds, capital may begin moving toward alternative stores of value. Historically, gold has benefited from those shifts, but silver often follows gold, and sometimes moves even faster. Why silver moves faster than gold? Here's something important to understand. The silver market is much smaller than the gold market. That means relatively small changes in demand can create massive price moves. When investment demand enters the silver market, prices can rise extremely quickly. This is why silver often outperforms gold during precious metals bull markets. Gold moves first, then silver catches up, and sometimes explodes higher. It happened in 1980. It happened in 2011. And many analysts believe it could happen again, the commodity supercycle. Another factor supporting the silver bull case is the possibility of a new commodity supercycle. Commodity markets tend to move in long cycles lasting decades. The last major commodity boom occurred in the early 2000s. Since then, many raw materials have been underperforming financial assets. But that trend may be changing. Rising geopolitical tensions, energy shortages, infrastructure spending, green energy transitions, all of these factors are increasing demand for commodities, and silver sits right at the center of that trend. Could silver really reach $500? So let's return to the big question. Could silver really reach $500? No one can predict exact prices. But what we can do is look at probabilities. Several independent factors are aligning right now. Silver breaking out of a long-term price range, the silver to gold ratio expanding, massive global money supply growth, rising industrial demand, potential commodity supercycle, structural shifts in global financial markets. When multiple powerful trends converge, markets can move much faster than people expect. And history shows that commodities often overshoot during major repricing events. In other words, if the fair value for silver were $200 or $300, it wouldn't be surprising to see a temporary spike even higher. That's how markets behave during periods of financial stress and structural change. Right now, most investors are focused on short-term volatility, daily price swings, market noise, fear headlines. But the bigger story may be something much larger. Silver could be entering a period of structural repricing after decades of suppression. If that happens, the moves could be dramatic, not necessarily in a straight line, but potentially much faster than most people expect. And that's why understanding the macro forces behind the silver market is so important. Because when major financial shifts occur, the biggest opportunities often appear before the mainstream narrative catches up. Now, I want to hear your thoughts. Do you think silver could actually reach $300 or even $500 in the coming years? Or do you think these predictions are too extreme? Let me know in the comments. And if you enjoy deep dives into gold, silver, commodities, and global financial trends, make sure to subscribe. Because the next few years in the precious metals market could be some of the most interesting we've ever seen.